Hello students, how are you all? I hope you are doing well. I am back with another video, that is CA Foundation Accounting January 2025 question paper analysis along with the suggested answers. First, let us see the question paper first. So I hope every student have written accounting paper well. Now, when it comes to the overall question paper, whether it is easy or moderate or difficult, if you ask this question to a number of students, they give you different answers. For some students, the same question paper may be easy, for some students it is moderate, and for some students it is difficult, and for some students it may be lengthy also. Why they are giving different answers? That means it depends on their conceptual knowledge, at the same time their practice during the examination time. Yes or no, students? Yes. Now, so if you ask me, sir, from your point of view, and if you ask the same question to a different faculty also, they give you different answers, students, because it depends on their individual perception. Yes or no? Yes. So now you may ask, sir, from your point of view, tell me, is this question paper easy, moderate, or difficult? That I will discuss at the end of the video, because let us discuss the question paper in detail. Then I will make a statement whether it is easy, moderate, or difficult. Is it clear, students? Next question: is there any question out of the syllabus? Do remember, in our CA curriculum, there is no question from out of the syllabus. Yes or no, students? Yes. So everything is within the syllabus only. Is it clear? Now we enter into the question paper analysis. Look at, as you know very well, true or false statements. See, these true or false statements, earlier ICAI used to give true or false statements from the each ICAI will give you true or false statements at the end of each chapter. But nowadays ICAI is giving true or false statements from not only from true or false statements which have been given at the end of the chapter, but also they are giving some true or false statements from the sentences or from the paragraphs. Yes or no, students? Yes. When you if you are conceptually good enough, then you can answer these true or false statements easily. Look at the first question. Matching concept is based on accrual concept. Yes, students. So matching concept is based on accrual concept only. Actually, the same line you can see under the concept of matching concept. Yes or no, students? Yes. So here I have given suggested answer, students. Small disclaimer, that is, these are prepared as per my knowledge and from my perception, and some other faculty may differ with this also, but we have to wait till the ICAI release the suggested answers. These are prepared from my perception. Okay, now look at, so you can find the same document in Shrestha for CMA CA and CMA.com. Okay, so if you type Shrestha for CMA, then you can find here free resources. Free resources. Under that, here you can simply check CA Foundation. There you can find. Is it clear? Now we upload the document. Don't worry. Is it clear, students? Yes. Now look at it. First, true or false statement. Yes, the given statement is true. Clear, students? Here I will explain the important concepts only. Remaining everything you can see in the suggested answers. Is it clear, students? Yes. Second one, customers of business should not be considered as users of accounts prepared by business. They are not interested in knowing the performance of the business. It is a false statement, because customers of the business are also interested in knowing the results of business. So the given statement is false. Next one, under inflationary condition, FIFO will not show lowest value of cost of goods sold. See, under FIFO method, what we do, we issue the goods first in, first out. Under inflationary conditions, what happens? Observe. Under inflationary condition, LIFO and weighted average will not show lowest value of goods sold. but FIFO will show lowest value of cost of goods sold. Observe students. Understood students? So under inflationary conditions, FIFO will not show lowest value of cost of goods. This is false. Why? Because under FIFO, what we do, we issue units. We issue units from old stock. The old stock always at lower price than the current market price. That's why under inflationary condition, FIFO will show lowest value of cost of goods sold. But when it comes to LIFO, it will show highest value of cost of goods sold. That's why the given statement is false, students. Next one, fourth one. For redemption of preference shares, proceeds from fresh issue of equity shares and debentures can be utilized. False. See, for redemption of preference shares, we can utilize proceeds from equity shares only or preference shares, but not debentures. Yes or no? So the given statement is false. Observe. Next one, bookkeeping and accounting are not synonymous terms. They are different from each other. Yes, it is true, students. So bookkeeping and accounting are not synonymous because they are different from each other. So the given statement is true. Next one, a ledger is also known as the principal book of accounts. Yes, ledger contains all the accounts. Yes or no? So that's why real accounts, nominal accounts, and personal accounts. That's why it is called book of principal book. So the given statement is true. Is it clear, students? Next one. Next question. Explain four main functions of accounting. So this is a question from theoretical framework, student. So here I have given answer. It is just copy pasted from ICAI study material. You can write any four functions of accounting. Four functions of accounting. Is it clear, students? Next one. Now 1C. 1C is from subsidiary books. 1C is from subsidiary books and they have asked sales returns book. In sales returns book, we record only goods returned by the customer which were earlier sold on credit. And the goods which were sold for cash, if the customers returns those goods, then we should not record these sales returns in the sales returns book. Now, based on this concept, this question depends. To get the first transaction, 6/12/2024, return received from our store 30 shirts 300 and 15 trousers 500 less trade discount. It is a sales return which were sold earlier on credit, so that we record it in the sales returns book. Observe. Next one. Modern tailors returned 10 frocks which were sold for cash. So these goods were earlier sold for cash. Now they are returning. This is not recorded in sales returns book. So you have to mention a note point. Next one. Return received from Tulip store 12 t-shirts each. Yes, this can be recorded in sales returns book. Observe, students. Now the total of sales returns book is 25,980. Clear? Next question. It is very easy question, student. Next question. 2A. This question is from depreciation. This question is from depreciation. Some students, they may get some confusion. Yes, in this point. The firm also shifted the machinery purchased on April 1st, 2021 to the new plant and incurred freight of 10,000. So most of the students will get a doubt in this question. So it is not part of our cost of inventory, students. Sorry, cost of asset. So if you ignore this point, now you can continue the problem. To get a firm purchased a second hand machinery on April 1st, 2021 for 15 lakh, subsequent to which 2 lakhs were spent on its repairs and installation. But the total cost of machine 17 lakhs. Observe. So when you have more than one machine, so it is always better to prepare a working note like this. So machine 1 cost 17 lakh. Next one. On October 1st, 2021, another machinery was purchased for 9 lakh and cost of installing the machine in a new plant is 20,000. But the total cost of machine 9 lakh 20,000. So second machinery cost 9 lakh 20,000. Next one. Yeah, this point we can ignore because it is treated as a revenue expenditure. They adopted a policy of charging depreciation at 12% per annum on diminishing balance method. The method of depreciation is WDV method and the rate of depreciation is 12%. Okay. Now on April 1st, 2023, it was decided to change the method and rate of depreciation to Straight line basis. Yes. So here is the important point. From April 1st, 2023, they are changing the method of depreciation along with the rate also. So earlier they followed WDV, now they are following SLM. Now, as on for April 1st, 2023, whatever the book value of asset we have, that is considered as cost of asset in the new method, that is SLM. Look at on this date, the remaining useful life was assessed as 5 years for both the machines purchased with no scrap value. Is it clear? So April 1st, 2023, you try to calculate the book value of both the asset, that is considered as cost of asset. Now for both the assets there is no scrap value. Look at next one. On October 1st, 2023, the first machine became outdated and sold for 2.5 lakh. Fine. On the same date, another machinery was purchased for 8 lakh 50,000. The estimated useful life of the machine is 10 years and residual value is 30,000. This is machinery 3. Total cost is 8.5 lakh. Machinery 3 total cost 8.5 lakh. Next one. You are required to prepare the machinery account for the year ending 31st March 2024. Here is again another important point, student. So here you should prepare machinery account only for 1 year. Only for 1 year. The year ending is March 31st, 2024. Year beginning is 1st April 2023 to 31st March 2024. For this financial year, you have to prepare machinery account. Now, to prepare the machinery account, we should first calculate what is the WDV of both the machines. Both the machines as on 1st April 2023. This is important point in this problem. For that, you should calculate working note. You should do working note. Observe, students. Cost of machinery. After that, depreciation for 21-22. So first machinery 12% for full year. Machinery 2 for 6 months because it is purchased on October 1st. It is purchased on October 1st. Na? So you have to provide for 6 months. Next one. This is the WDV 2022-23 WDV. Yes or no, students? Now again calculate depreciation for 22-23. WDV 12%, 1 year, 12% 1 year. These are the WDV for 2023-24 or 1st April 2023. No problem. Now, if you add these two amounts, now this is nothing but WDV as on 1st April 2023. 1st April 2023. Don't forget, students. Is it clear? Yes. So put together, the opening balance of asset is 20,77,504. Now, during this year, we have sold one asset for 2.5 lakh. Entry bank account debit to asset account 2.5 lakh. Next one, we have provided depreciation. Sir, how depreciation is calculated on 1st April 2023? From 1st April 2023, we are changing the method of depreciation from WDV to SLM. So, the cost of asset is 13,16,480 divided by 5 years is the useful life. How many years? 5 years is the useful life. Look at 13,16,480 divided by 5 years. So, it comes around 263 296. But the first asset is used, that first machinery is used for 6 months. That's why how much divided by 2? 1,31,648 is the depreciation for machinery 1. And the WDV for second machinery is 761,024. On this we calculate 761,024 divided by 5 years useful life now. So 1,52,205. So like this we have calculated depreciation for 23-24. This is important point in the exam problem. Clear, students? Now this is the WDV as on 1st October 2023. 1st October 2023. 11,84,832. But we sold for 2.5 lakh. Loss on sale of machinery 9,34,832. Now look at by bank, by depreciation, by profit and loss. Next, on 1st October 110. On 1st October 2023, we purchased another machine 8.5 lakh. On both the machines put together, depreciation is 193,205. Remaining is balance amount. This is simple problem of depreciation. The whole concept of depreciation depends on this working note, students. That's it. Check the working note once again. Next question is BRS. So BRS is also again a simple question, students. Why? Because see, from BRS, don't expect the same copy paste style of problem. Why? Why? Because they are mixing various transactions and they are giving you a problem. That's why. See, from the following information, prepare a bank reconciliation statement as on June 30, 2024 for Messrs XYZ Limited. Observe bank reconciliation statements as on June 30, 2024. Heading. First, the bank column of cash book was overdrawn, means overdraft 24,768. Write down the same. Overdraft as per cash book 24,768. Now, each transaction, observe bank charges amounting to 350 had not been entered in the cash book. Because of this cash book overdraft less, passbook overdraft more, 350 add. Checks amounting to 88,678 issued before 30th June 2024 but not yet presented to bank. See, already checks issued na, cash book OD increases whereas passbook OD not increase. So deduct minus. Next one. One payment of 4590 was recorded in the cash book as if there is no bank column. But that means we have made a payment but it is not entered in the bank column of cash book. Cash book OD less whereas passbook OD is more. So add 4590. Next one, company paid 15,500 to a creditor and received a cash discount at 2%. Normally, how do we write this transaction in cash book? We paid the amount now 15,500. So 15,500 into 2%. How much? 310. So 15,000. Just a minute. This is discount received 310 and this is bank minus 15,500. So we have to write like this 15,190. We have to write like this. But the cashier erroneously entered the gross amount in the bank column of the cash book. That means he did not write 310 rupees in the discount received column, but he has written 15,500 in the bank column. That means cash book overdraft increases now, but whereas passbook overdraft not increased. So we have to deduct 310 rupees. Don't forget, not 15,500. Discount amount only we have to reduce. Here, next, a debit of 5,700 appeared in the bank statement for an unpaid check. What is the meaning of unpaid check, students? So, in this transaction, most of the students will get a doubt. A debit of 5,700 appeared in the bank statement. Why this 5,700 debit will appear, sir? Simple. First, look at unpaid check. Unpaid check means check deposited into bank but not collected. See, generally, bank will follow this process. First, customer will deposit check into the bank. Bank will collect the check. Then after bank makes entry in the customer account. Sometimes what happens? After depositing check by the customer, the bank will make an entry in the account. After that, bank will collect the check. So that is happened here. Means in the passbook, bank has given credit first. But you are not allowed to withdraw this amount. Do remember. Now, during the collection process, which had been written marked out of date, during the collection process, what happened here? The check is out of date. Check is out of date. That's why the bank has given debit of 5,700. Bank has given first credit, later on debit. But whereas in the cash book, we have debited 5,700 now. So cash book overdraft decreases whereas passbook overdraft increases. So that 5,700 add. Observe carefully. Next one. Checks deposited in bank but not yet cleared amounted 45,789. Checks deposited, cash book overdraft decreases whereas passbook overdraft increases. Not collected now. Yes, add. Dividend of 1980 collected by bank was not recorded in the cash book. Dividend collected by bank, overdraft decreases as per passbook, but cash book not decreased. So minus. Amount of 2340 wrongly credited by bank to the company account for which no details are available. See, wrong credit given by bank, even though our overdraft as per passbook gets decreases. So minus. Next one, on June 25th, 2024, the credit side of bank column of the cash book was overcast by 6,789. Credit side means payment side. Payment side overcast. Already we have overdraft. Now, overcast means our overdraft balance increases, but as per passbook, our overdraft not increase. So, by following these symbols, you can observe here. Finally, we got, see, here we have started with overdraft balance. Okay, overdraft increased 81,197. Overdraft decreased by 1,97,000. So, what is your passbook balance? Passbook balance came to favorable balance. Don't forget, students, this is very, very important. Passbook balance became favorable. If you write it is unfavorable balance as per passbook or debit balance as per passbook, if you write like this, the answer is wrong. To remember, be careful. Okay, next question. 3a. 3a is from accounts of sole proprietorship. Final accounts of sole proprietorship, students. Look at. From the following schedule of balances extracted from the books of Mr. Piyush, prepare trading and profit and loss account for the year ended 31st March 2024. Okay. So here the important adjustments are investments, deposits, bank loan. That's it. These are the very important adjustment. Same type of problem we have in our practical question, students. Practical question. You can go and observe. Look at capital account, balance sheet, liability side, stock, opening stock, trading account debit, cash in hand, balance sheet, cash at bank, balance sheet. Here observe investments at 9% as on 1/4/2023. Opening 50,000. From the opening we have investments now. So total interest receivable 4,500. 3,000 into 9%. At the same time, deposits we have at a 10% from the beginning of the year 1/4/2023, so that we should receive 30,000 rupees interest. So total interest receivable 34,500. This is important calculation. Next one, investments asset side, deposits also assets. Drawings deduct from capital. Purchases trading account debit, sales trading account credit, returns inward. Mine deduct from sales, returns outward, deduct from purchase, carriage inward, trading account debit, rent, P&L account debit. It is also another important adjustment. They have given that 1 month rent is outstanding. 1 month rent is outstanding. 1 month rent outstanding means how much? They didn't give the amount. See, generally we have to pay rent for full year, 12 months. They said 1 month rent is outstanding. That means this 66,000 rupees is paid for 11 months. Means 6,000 rupees per month. Per month. So 1 month rent outstanding is nothing but 6,000. So 66,000 plus 6,000, 72,000 we show in the P&L account debit side. Whereas 6,000 we show on the liability side of balance sheet. Next one, salaries. Salaries also we have adjustment. Outstanding salary. So this adjustment you know very well. Next one, debtors, creditors, debtors balance sheet asset, creditors liability, bank loan, sorry, debtors 2,35,000, creditors 1,37,500, bank loan 2 lakhs. If you observe, bank loan they are giving 12%, 12% rate of interest. We have borrowed loan on 1/10/2023, whereas the books of accounts are closed on 31st March 2024. Means the loan is outstanding for 6 months. The loan is outstanding for 6 months during the current year. So we have to pay 2 lakhs into 12% into 6 by 12. Have to pay 6 months rent. Na? So 2 lakhs into 12% into 6 by 12. So total we have to pay 12,000 rupees rent, student. Now we check how much rent is paid out of 12,000. Observe. Furniture asset, balance sheet asset side, interest paid 12,500. Here you may ask, sir, we have to pay only 12,000 na interest, but here they paid 12,500. Look at the adjustment. What is the adjustment they have given? Interest paid includes 9,000 paid against bank loan. Generally, we have to pay to the bank 12,000, but here they are saying 9,000 is paid. 9,000 is paid. Means still 3,000 is outstanding. Okay, so here interest paid 12,500 plus outstanding 3,000, total 15,500 we have to show the balance sheet, sorry, in the P&L account debit side. Balance sheet 3,000 rupees outstanding interest on loan we have to show. This is another important adjustment. Next one, interest received. If you observe interest received, look at, and interest received pertains to investments and deposits. Total interest receivable is 34,500. Already we calculated. Total interest receivable on investment and the deposits to both together 34,500. Whereas interest received is only 28,500. Still 6,000 rupees interest is receivable, accrued interest. In the P&L account, we show 34,500 on the credit side, and in the balance sheet, we show 6,000 rupees as accrued interest. Next one, advertisement as usual, printing and stationery, electricity, discount allowed, discount received, bad debts, P&L account debit, general expenses, P&L account debit, motor car expenses, insurance premium. Another important adjustment is here insurance premium is 30,000 rupees total paid, but they said insurance premium includes 18,000 paid towards proprietor's life insurance. 18,000 rupees is deducted from capital, and remaining 12,000 rupees is shown on the debit side of P&L account. Is it clear, students? Next, postage and courier. That's it. Now look at the adjustments one by one again. The value of stock. This is closing stock, trading account credit, balance sheet asset. This we know. This includes goods returned by customers on 31st March 2024 to the value of 25,000. Another important adjustment. But there is no entry has been passed in the books. Now we record the entry. What is the entry? Sales returns account debit to debtors account. Already here we have sales returns 1,10,000 rupees. Now we add more 25,000 rupees. Total sales returns are 1,35,000. Now here we have debtors 2,35,000 minus 25,000 rupees returns. Now we have effective debtors 2,10,000. Is it clear, students? Next one. Purchases include one furniture item purchased on 1st January 2024 for 10,000 rupees. First, we deduct this 10,000 rupees from purchase and we add this 10,000 rupees to furniture. Already we have 25,000 balance now. To that we add. Here, important is calculation of interest. On 25,000 rupees furniture, we calculate full year depreciation. But on 10,000 rupees furniture, because they are giving date of purchase, we calculate 3 months depreciation. This is important adjustment. Next one. Provide for interest or payable on bank loan and interest already we calculated. Make provision 5%. Debtors are 2,35,000 minus 25,000 returns. Remaining is 2,10,000. On that 5% provision. 2,10,000 into 5%. 10,500 we have to make a provision, P&L account debit, and the same amount deduct from debtors in the balance sheet. That's it, students. Problem is completed. So here I have given answer in detail with the working notes also. You can just compare gross profit, net profit and balance sheet total. Yes or no, students? And working notes plays an important role for this problem. That's why they have given this question for 15 marks, I hope. Yes, this question is for 15 marks. So they will expect these working notes, students. Is it clear? Next question. This is surprise question, students. Surprising question. Why? Because here they have asked effective capital. Same type of problem we have in our material, ICAI material. You can go and check. Same type of problem. Just amounts and partners names are different. Observe. X and Y are partners sharing profits and losses in the ratio of their effective capital. So they are sharing profits and losses in their effective capital. On 1st April 2023, they had 2,80,000 and 1,60,000 respectively in their capital accounts. Now, sir, what is the meaning of effective capital? See, generally, here opening balance of partner we have 2,80,000 rupees. Suppose if the partner did not bring any amount, or if partner did not withdraw any amount, then his capital is 2,80,000 rupees. Yes or no? This 2,80,000 rupees is there in the business for entire 12 months now. Entire 12 months. So 2,80,000 rupees for 12 months, students. So for 1 month, sorry, 2,80,000 rupees for 12 months, how much it becomes? 2,80,000 rupees into 12 months. So 33 lakh 60,000 rupees for 1 month. Like this, we calculate effective capital, students. Effective capital. 2,80,000 rupees is there in the business every month now. Every month. So that if we consider for 12 months, so how much capital we invested in the business? 33 lakh 60,000. But it is not actually 33 lakh 60,000. In entire year, the capital is only 2 lakh 80,000. Like this, if we calculate for effectively how much capital we have in the business every month, 2 lakh 80, like that for 12 months, 33 lakh 60,000. This concept is very important. Now look at X introduced a further capital of 20,000 on 1st June 2023. Till 1st June 2023, how much capital we have in the business of X? 2 lakh 80,000. From 1st June 2023, how much capital of X we are having? 2 lakh 80 plus 20, the capital become 33 lakhs. Next step. And another 15,000 on 1st October 2023. From 1st October 23, his capital is earlier 3 lakhs, now 3 lakh 15. On 31st January 2024, X withdrew 25,000. From January 31st onwards, what is his capital? Earlier 3 lakh 15. Earlier 3 lakh 15, now he is withdrawing 25,000. His capital is 2 lakh 90. So his capital is fluctuating during the year. For some period of time, the capital is fixed. After that, the capital is changing. Yes or no? Again, for some period of time, the capital is fixed. Again, the capital is changing. Like this, capital is increasing sometimes and decreasing sometimes. On average, effectively, how much capital we have in the business? That is the calculation. Now, in the same manner for Y also. Now, observe the calculation here. Yes, first we calculate for X. After that, we come to Y. Look at 2,80,000 rupees invested for 2 months. Means 5,60,000 invested for 1 month. Like this, you just calculate. Total effective capital of the proprietor X, partner X is 36 lakhs. Now Y also, same calculation. Total capital, effective capital of Y is 21 lakh 60,000. Now calculate capital ratio. So nothing but 5 is to 3. In this ratio, they are sharing profits and losses. This is the first calculation. Second one, first they are asking profit sharing ratio 5 is to 3. Second calculation, interest on capital. Interest on capital. Here we have calculated effective capital now 36 lakhs. Calculate 36 lakhs into 12% is the rate of interest on capital, and calculate interest for 1 month. So that you get 36,000 and 21,100. Next one, interest on drawings. Observe. Interest on drawings. X drew 5,000 at the beginning of each quarter and Y drew 1,500 per month at the end of each month, beginning from April 2023. See, we have simplified calculations. If any partner is withdrawing a fixed amount in a fixed interval time period, then how do we calculate interest? See, X is withdrawing 5,000 at the beginning of each quarter. In a year consists of 4 quarters. So 4 quarters, that means 4 into 5,000. He has totally withdrawn 20,000 rupees, and he is withdrawing from the beginning of the each quarter now. So that how can we calculate? First 5,000 is outstanding for 12 months. Second 9 months. Third withdrawal 6 months. Next withdrawal 3 months. So divided by 12. Sorry, 4. 12 plus 9 plus 6 plus 3 divided by 4. So on an average, if you calculate 7.5 month interest, then our calculation becomes easy. The same manner, y also per month at the end of each month, beginning from April 2023. From April month onwards, he is withdrawing every month 1500. So 1500 into 12 months, that comes around 18,000 rupees. He has total amount withdrawn at the end of each month. For this also we have a calculation. Now look at, so 5,000 into 4 quarters into 10% is the rate of interest given. We have to calculate 7.5 months average. And why 1500 every month he is withdrawing into 12, rate of interest 10%. This is the average student. See, he is withdrawing first month ending na. The first withdrawal amount is outstanding for how many months? 11 months. Second withdrawal amount is outstanding for how many months? 10 months. Third amount withdrawal is outstanding for how many months? 9 months. Like that you calculate. 8 plus 7 plus 6 plus 5 plus 4 plus 3 plus 2 plus 1 plus 0. Last month withdrawal is outstanding 0 months now. Divided by 12. You get 5.5. Is it clear, students? Yes. These are the interest amount. This is a simple problem, students, but conceptually you have to be very clear. Now, fourth question. In the previous June attempt and September 2024 attempts, they have asked questions from dissolution of partnership, admission, and retirement. Now they are asking a question from death of a partner. Death of a partner. And that too, this problem is similar to our illustration problem, students. Already this type of question we have in the study materials. You can go and check. Okay, now look at what are the important aspects in this problem. Simple. Goodwill calculation. First thing, goodwill calculation. How they are going to calculate goodwill? Goodwill of the firm was to be valued at 2 years purchase of average profit of 4 years to 31st March preceding the death of a partner. Look at 4 years profits they are giving average. How much is average profit? Observe. 4,80,000 is the average profit. So goodwill is multiplied with 2 years. 2 years purchase. No? So total goodwill is 2,40,000. Out of this, who died? Mr. C. Observe. ABC are partners sharing profits and losses in the ratio of 3 to 1. The following is the balance sheet of Messrs. ABC Trading Corporation as on 31st March 2024. Observe. C died on 30th June 2024. For how many months he is alive in the business? During financial year 31st March 2024. That means 3 months he is alive in the business. Yes or no? Okay, fine. So what is his share of profit? C na. So 1 by 6. Out of the goodwill, 1 by 6 is his share. Now this goodwill is compensated by gaining partners. This goodwill is compensated by gaining partners. So that here we have to calculate who are the gaining partners. What is the formula for gaining ratio? To calculate gaining ratio, new ratio minus old ratio. Here old ratio already given 3 is to 2 is to 1. Now check for old ratio. Sorry, new ratio 5 is to 3. So calculate gaining ratio like this. What is the gaining ratio here? 6 is to 2 or 3 is to 1. Now this 40,000 rupees is shared by A and B in their gaining ratio. For that, what is the adjusting entry? Observe. A capital account debit, see, into 3 by 4 and 1 by 4. Not 96, minute, 40, 40, 40, 40. Yes or no, students? Yes. Next one. Next important adjustment is, this is not here, this is C. This share of profit till the date of death. This share of profit till the date of death. Observe. He is alive for 3 months now. So how the share of profit is given? We have a concept of share of profit may be given based on time basis or turnover basis, or sometimes they may give you based on the previous year's average profit. Based on the previous year's average profit, we have to calculate share of deceased partner. Look at profit till the date of death to be ascertained on the basis of average profit of previous 4 years, and share of C was to be credited to his capital account. Okay. Already we have calculated average profit now. What is the average profit? 1,20,000. He is alive for 3 months now. So 3 months profit is how much? 30,000. Out of that, C's share of profit is how much? 1 by 6. So 5,000. What is the entry we have to write for this? Profit and loss suspense account debit to C's capital account 5,000. This is another important calculation in this problem. 5,000. Yes or no, students? Yes. And another important aspect, this is revaluation of assets and liabilities. No, already we know this concept. Next one, a sum of 2,40,000 was received from insurance company against joint life policy. This is another important area in this problem, important concept. Most of the students there get some confusion regarding treatment of joint life policy. Here observe, already we have in the balance sheet joint life policy. Means they are maintaining joint life policy at surrender value. At surrender value. So that it is always better to prepare JLP account. How much balance we have? 90,000. But how much amount received on the death of C? 2,40,000. How much difference we have? 2,40,000 minus 90,000. So 1,50,000 rupees difference. This 1,50,000 we can distribute to A, B, C in their profit sharing ratio 3 is to 2 is to 1. That's it. This is the accounting for joint life policy. Next, in the balance sheet, we have general reserve. This is also distributed to the partners. Apart from these adjustments, there is nothing new in this problem. Observe, students. There is nothing in this. And they said settle the executor's account also. Clear revaluation account, partners capital account, balance sheet as on 30th June. Observe, here I have given detailed solution along with the working notes. Here we have revaluation profit that is distributed to partners. Here observe carefully one by one. Working notes also, students. Joint life policy account also. Is it clear? Yes. Next one. So this question also easy. Okay. Following or next question is from accounts from incomplete records. In accounts from incomplete records, we have two different methods. One is statement of affairs method. Second one is conversion method. This question is on statement of affairs method. Following are the details of assets and liabilities of Mr. Sarthak for the year ended 31st March 2023 and 31st March 2024. Here they are giving opening date assets, assets on opening date and assets on closing date. Observe. Building, furniture, inventory. So here we have to prepare statement of affairs for opening of the year and ending of the year. Here if you observe, at the end of the year, building account balance question mark, furniture also. But they have given depreciation rates. They have given depreciation. Building 5%, furniture 10%. So building 2 lakhs minus 5%, it comes to 1,90,000. Furniture 75,000 minus 10%. 75,000 minus 10%, it comes 67,500. Now with these balances, you just first prepare statement of affairs here like this. So you get 3,14,500 and 4,32,600 as capital balances. By taking these balances, now we calculate profit or loss. Is it clear, students? Yes. So closing capital plus drawings. Drawings are 2,500 per month na, into 12 months. So additional capital introduced 40 and fresh capital opening capital is 314,500. So our profit during the year is 1,08,100. Make sure that this question is also easy, students. Next one. 5A. See, 5A looks little bit lengthy question, students. Fifth question, not 5A. Fifth question looks little bit lengthy question and it takes some time. How, sir? Just look at 5A is from NPO chapter, not for profit organization chapter. Look at from the following income and expenditure account. They are giving income and expenditure account and some additional information, and they are asking us to prepare surprisingly receipts and payment account for the year ending 31st March 2024 And the balance sheet as on 1st April 2023. Some students, there may be chances that they also prepare balance sheet as on 31st March 2024, that is closing balance sheet. Some students, they may commit this mistake, but they are asking simple 31st March 2024, prepare receipts and payments account and balance sheet on 1st April 2023. Okay, they are giving income and expenditure account. Next one, additional information. In this problem, the important two calculations which I have to discuss is stationery was depreciated by 25% and sports material by 50%. These two are very important, students. Look at, yeah, this is opening balance sheet. Now look at stock of sports material. They said we have opening stock of sports material is 30,000, and they are also saying that we sold 2,400 worth of stock of sports material. Now, if you observe, they are giving depreciation on sports material is 50%. Indirectly, they are asking us, they are saying that you calculate what is the purchase of sports material during the year. What is the purchase of sports material during the year? That is what they are asking. Look at, for that, what is our calculation is, here they have given depreciation 22,000. So 22,000 divided by 50% means they have calculated depreciation on 44,000 rupees asset. 44,000 rupees asset. Out of 44,000, already we have 30,000 rupees asset now. Already we have 30,000 rupees asset now. So balance amount purchased is 14,000. Balance amount purchased is 14,000. This is important in this problem. Is it clear, students? Yes. Next one, stationery. Stationery, already we have balance 4,000 rupees. But they said depreciation is 1,500. And they provided depreciation at a 25%. Na? So 1,500 depreciation divided by 25%. 1,500 divided by 25% means 6,000 rupees. They calculated depreciation on stationery for 6,000 rupees on the value of 6,000. But beginning already we are having 4,000 now. But they calculated depreciation of 6,000. So here our assumption is we have calculated, we have purchased 2,000 worth of stationery. We have purchased 2,000 worth of stationery. This is a important adjustment in this problem, student. Apart from this, there is nothing difficulty. Nothing difficulty. And one more thing, here they said tournament fund after deducting tournament expenses 14,000. Means this 14,000 rupees we have to show as an expense. That is important aspect in this problem. Next, donations for club building. If you observe, opening there is no donation for club building. But at the end of the year, we have donation for club building. Nothing but it is receipt. It is receipt. Yes or no, students? So these four things are very important in this problem. Apart from this, there is nothing new. Clear? Next one. 5b. In that first one, it is a question on bills of exchange. Bills of exchange. Observe. Mr. A accepts two bills of exchange on June 1st, 2024 for 1,50,000 and 60,000 drawn on him by Mr. B. So, two bills now. So, entry for two bills. Do remember, students, these answers are only from my perception. So, after release of suggested answers by ICAI, we check any corrections are there. Now, first entry. Okay. Next one. The bill of exchange for 1,50,000 is for 2 months, while the bill of exchange for 60,000 is for 3 months. Already here we have calculated due dates also. Yes or no? Due dates. Next. Mr. B got the first bill discounted with the bank for 1,49,000. Write down the entry for this. Bank account debit, discount account debit, 2 bills receivable, 1 account. On June 1st. On August 2, 2024, Mr. A requested Mr. B to cancel both the bills and drew a new bill on him. The combined amount of both the bills along with 12% interest for a period of 2 months. That means 1,50,000 plus 60,000. He is asking for both the bills, you just draw a new bill for the next 2 months. So 2,10,000 rupees is both the bills. So here important calculation is interest calculation. 2,10,000 into 12% into 2 months. So that we get 4,200 rupees interest. So this entry important. That means both the bills are dishonored now. So this is a dishonor entry. A account debit to bank account to bills receivable number 2. Because already number 1 bill is discounted with bank. Next one, we are drawing another bill, bills receivable number 3 along with interest. Now this bill also dishonored because due to his insolvency. So pass the dishonor entry. After that we received only 40 paisa from his estate. So remaining amount is bad debts. That's it. This is another simple problem from bills of exchange. Next one, second problem is on inventory students. Surprisingly, they have added cost of purchase of inventory calculation in the inventory valuation concept. Observe. Normally, if you get like a problem like this, you can easily complete it. But what they did, they said the manufacturer also incurred the following expenses: freight 300 and unloading charges of 150 at the time of every purchase respectively. Here, how many purchases we have? Observe. 2nd May and 16th May. Apart from this 18 rupees per unit, 21 rupees per unit, we have also incurred 300 plus 150. So these amounts also we have to include in the cost of inventory. Cost of inventory. That is the important calculation. Apart from this, nothing is new. Next, warehouse rent. Warehouse rent is not included in the cost of purchase. Administrative expenses also not included in the cost of purchase of inventory. Clear? You are required to find out the value of inventory as on May 31st, 2024 if the company follows weighted average and FIFO. They're asking two methods and this question is for 5 marks only. That's why I said fifth question is a lengthy question, student. So if you know remaining 5 questions, you can take fifth question as choice. You can take fifth question as choice, provided you should write remaining 5 questions. Now look at. So here also I have given complete answer with detailed information. Look at first for the two purchases, calculate the cost of purchase per unit. Look at quantity, rate, total amount 300 rupees for freight, unloading charges. Total amount is 5,850. This is for how many units? 300 units. Per unit 19 rupee paisa. Same calculation. 21 rupee 90 paisa. Observe weighted average method. Finally, weighted average method, what is our answer? 2,112. 2,112. Next one. See, here it may be 21.08, but for setting the amount on an average, we have written 2,112 as our closing stock. Under FIFO method also they are asking now. That's why I said it is little bit lengthy. So under FIFO method, the stock value is 2,190. Is it clear, students? Yes, this is 5B2. Next one, 5C. 5C is for redemption of debentures. Redemption of debentures, that too convertible debentures. Debentures. Here they said, look at, a company had issued total 20,000 debentures we have issued, 8% partly paid up, partly convertible on April 1st, 2023. The debentures are due for redemption on June 1st, 2024. The terms of issue is 30% of the debentures will be converted into equity shares. Nominal value 20, but issue price is how much? 20. The remaining will be redeemable at a premium of 5%. At the time of converting the debentures, don't add this premium of 5%. Why? Because they said 30% of the debentures will be converted into equity shares. After that, the remaining will be redeemed at a premium of 5%. Yes or no, students? This is the important concept in this problem. Next one, what they are asking, calculate the number of equity shares to be allotted to the debenture holders at the time of conversion. Simply, total 20,000 na, 20,000 into 30%, so 6,000 debentures. 6,000 debentures into 100, we have to pay 6 lakhs to them. We have to pay 6 lakhs divided by our issue price of share is 20. So how many equity shares we have to issue? 6 lakhs divided by 20. That is, we have to issue 30,000 equity shares. For this, we have to write the entry. First calculation, look at. Okay, first calculation, 30,000. And for the remaining members, we have to pay cash. How much cash we have to pay? Look at total debentures 20,000 minus 6,000 debentures converted into equity shares. That means remaining 14,000 debentures we have to pay cash. Each debenture face value 100, but redemption value 5% premium. Total 105. Total amount payable to them 14 lakh 70,000. Now, second requirement, give the necessary journal entries related to the conversion and redemption of debentures, assuming that the company has created the debenture redemption reserve and also invested required amount for redemption of debentures at the time of issue. Here is the googly for students. What? They said already they have invested required amount plus already they have created required reserve. But how much? How much amount they invested and how much reserve they are maintaining? So indirectly they are asking you to calculate the amount of investment and amount of reserve. You know very well. Now, total amount to be redeemed is 14 lakhs. Because on non-convertible portion, you need not to maintain any investment or reserve. But convertible portion you have to maintain. On 14 lakhs, reserve you have to maintain 10% means 1 lakh 40,000. 14 lakh into investment you have to made 2 lakh 10,000. These two calculations are important. Is it clear? Now look at the entries. First entry, we sell the investments now. We sell the investments at the time of redemption. So sale of investment 2 lakh 10,000. Next one, amount due to debenture holders. Total amount due to debenture holders. So 20 lakh, 8% partly convertible debentures account debit, premium 70,000, total amount 20 lakh 70. Out of them 6 lakhs debentures we are converting now. So this is the entry. Remaining amount we are paying. Remaining amount we are paying. Yes. And we have premium now. That premium is lost for us. So we are just against P&L account balance. And we are maintaining reserve. That reserve we transfer to general reserve now. That's it. These are the entries. That's why I said this question is a little bit lengthy question, students. The question is a little bit lengthy question. Next one, sixth question. Next one, sixth question. Sixth question is easy, students. Sixth question is easy. Why? Because here they have asked question of issue of shares. That's it. There is no concept of forfeiture. There is no concept of reissue. Only the concept is calculation of interest on calls in arrears and calls in advance. But but most of the students they get a doubt. Most of the students they get a doubt. That is Arpit Limited with an authorized capital of 20 lakh. They have authorized capital of 20 lakh divided into equity shares of 10 each. Means how many shares you get? 2 lakh equity shares you get. But in the problem, they have given company issued 3 lakh equity shares at a premium of 5 per share. Here, most of the students they get a confusion. So it may be by mistake, they have given by mistake like this. But you try to solve the problem by taking 3 lakh equity shares. And that too in the problem they said all the shares were applied for and allotted. Is full subscription. That's why assume. So at the end of the problem, you can write that. So in the problem, they have given like this 20 lakh. But here we assume that the total authorized capital of the company is 30 lakh divided into equity shares of 10 each. Because in the problem, they said 3 lakh equity shares are issued. You write like this, the problem is solved. Most of the students are in worry. Don't worry students, just you write this assumption and you try to solve the problem. Look at the amount was payable as follows. Application 2 rupees, allotment 7 rupees. Here they are giving dates. When they are giving dates, you have to be very careful for calculation of interest on calls in arrears. At the same time, interest on calls in advance. 1st November, first call and third call. Next, all the shares were applied for and allotted. Mr. Naresh, who held 20,000 shares, paid the whole amount due on calls along with allotment money. At the time of allotment money itself, one customer, Mr. Naresh, has paid remaining two calls. What is the remaining two calls amount? 3 rupees plus 3 rupees. Total 6 rupees on 20,000 shares. Okay, first we look the entries. First entry, bank account debit to equity share application 6 lakhs. Why? Because 3 lakh shares into 2 rupees, na 6 lakhs. Now this 6 lakhs we transfer to share capital. Next, allotment amount due. Allotment amount is due on 3 lakh shares into 7 rupees per share, 21 lakh. Out of that, 3 lakh shares into 2 rupees is premium, na? Sorry, 2 rupees is capital, 5 rupees is premium. So 3 lakh shares into 5 rupees. Next one. Now we are receiving amount. But observe students, along with allotment money, one shareholder has paid 26 rupees calls amount on 20,000 shares, so that we received calls in advance 1,20,000. Total amount received at the time of allotment is 22,20,000. This is important entry because they have given this question for 15 marks. Can score 15 out of 15. Next one. Now first call amount due 3 lakh shares into 3 rupees. 3 lakh shares into 3 rupees. Clear? Next one. Now we receive amount only on 2,80,000 shares on first call. Why? Because already on 20,000 shares we have received advance money. Now this 20,000 rupees shares advance money on first call we adjust from calls in advance. So 2,80,000 into 3, 8,40,000 and calls in advance 60,000. 90. Now final call due. Final call is due on January 1st, 2024. So 3 lakh shares into 3 rupees, 9 lakh. And equity share capital 9 lakhs. Now, at the time of final call, they said the final call was fully paid except a shareholder having 5,000 shares. That means total number of shares issued 3 lakhs minus already amount received in advance on 20,000 shares minus amount not received calls in arrears 5,000 shares, so that we receive amount on 2,75,000 shares. Observe, bank account debit 2,75,000 into 3. Calls in advance 20,000 into 3. Advance money we are adjusting 60. Calls in arrears 5,000 shares into 3. 15,000. Total 9 lakh. Yes or no? Now we have to pay interest. So interest on calls in advance account debit to bank account. Here interest calculation is important, students. Look at working note. First, total amount we received 1,20,000. Out of that 60,000 for first call and 60,000 for the second call. See, first call amount 60,000 into rate of interest is 12% into this amount is received 4 months in advance. 4 months in advance 2,400. Now second call amount 60,000, 12%. This amount we received 6 months in advance. Just look at the dates, you can observe 6 months. So 3,600, total 6,000. That is the entry here. Whereas we received calls in arrears also. They said we have received calls in arrears also. Yes or no, students? Look at. Along with interest on calls in arrears, company also paid calls in interest on calls in advance. Now look at. Arrears amount is 15,000 rupees. Arrears amount is 15,000 rupees. Rate of interest is 10% now. Arrears amount 15,000. Rate of interest is 10%. And this amount is we received after 2 months of final call. So 2 by 12. So total interest is 250. Now we receive amount of 50,250. This is 6A problem. That's it. Very simple problem, students. Very simple problem. But most of the students, they get confusion where here they are giving total authorized capital is 20 lakh. But they are saying only we issued 3 lakh shares. issued 3 lakh shares. So that's why we write the assumption that we are assuming that the company's authorized capital is 30 lakh is divided into equity shares of 10 each. Apart from that, nothing is built in this problem. Now, next question. After discussion of next question, see what are the advantages of double entry system. Again, it is a simple question because in the entire accounting we have followed double entry system now. So you can write some 4 to 5 points. Now, you people tell me after watching this analysis and suggested answers, is this question paper easy, moderate, or difficult? Except fifth question. Except fifth question. I agree, fifth question is very lengthy. Remaining questions you can solve. Remaining question you can solve. At least you can attempt. At least you can attempt the remaining questions. Yes or no, students? Yes. So you can easily get 50 marks. At least 50 marks. Because every difficult paper has the scope of getting 50 marks. Means this is not difficult paper, students. This is not difficult paper. We can say moderate. We can say moderate. Some typical points also there. So my as per my opinion, this question paper can be solved even by a student with 60 to 70% of preparation. 60 to 70% of preparation also, this question paper can be solved by the student. Is it clear, students? Yes. So you can download the suggested answers and you can verify your answers from the Shrestha website. Shrestha for CA CMA. Yes or no, students? Yes. So this is for in this video, and we meet again in the next video. Till then, bye bye everyone.